Let's bring in Mitch Roschelle, PwC partner and business development leader, who you've been, I know, Mitch, talking to a lot of companies and your clients, right, about tax reform. Looks like we've averted possibly this government shutdown. Is business going to be more confident here? Are they more confident?
Betty, they're absolutely more confident, and they're thrilled that this is done. Because think about it from a business. You're trying to run a business, and you're trying to figure out how to invest, and you don't know what the rules are going to be from a tax perspective. That's virtually impossible. So now that we're at the end of the year and we've got clarity, that has business managers wanting to move forward.
But has it gotten simpler for them or more complicated?
That's a complicated question, Betty. It's gotten a little bit more.
It means more business for you guys, though.
Well, that's not entirely incorrect, but it's gotten very simple from where the rules are going to be, but it's in transition very complicated.
Right.
The rate is down. We've shifted from a worldwide system to a territorial system. That is truly reformative in terms of the tax laws, and how we implement that is going to be a challenge. Think about someone in the retail industry that has a global supply chain. Where they manufactured their goods or where they acquired pieces of the supply chain is going to change dramatically when you shift from a worldwide system to a territorial system. So running the business is what's also complicated because they need to make those changes.
I want to pull up a chart here for our viewers, #BTV309, which reflects a lot of what you just said about business being confident. So CEO confidence is at one of the highest levels that we've seen in a decade, Mitch. But interestingly enough, M&A activity has actually hit the pause button in 2017, I think largely because these CEOs, even though they're confident, they're wondering, what do I do next, right? They want to see that clarity. So do you think there's a lot of pent-up demand or pent-up action, so to speak, not just in M&A, but other areas of business?
Let's just stick with M&A for a second. So there's a tremendous amount of capital sitting on the sidelines, what private equity likes to refer to as dry powder. The belief is that that dry powder is going to get wet, I guess, if we're going to go with that metaphor, in 2018. And then corporate to corporate M&A activity, that did pause because a lot of that is multinational, and you don't know how the tax rules are going to impact that. So now that there's clarity and people know what the rules are, I think 18 is going to sort of move forward, and we're going to see a lot of change there.
And Mitch, a majority of Americans still, Democrats included, still think that this tax bill benefits the rich. But what we've seen, the response from corporate America so far in the last 24 hours has been quite the opposite, right? Comcast, AT&T saying, these $1,000 bonuses are coming, Wells Fargo raising the minimum wage. When you speak to firms, where are they on this debate so far?
What's interesting is there's a lot of economic studies talking about when corporate tax rates are lowered, does the benefit go to labor? Does the benefit go to shareholders? And you can read all of them, and they're all over the place. The fact of the matter is, what you've seen in the last 48 hours is corporations telling their employees how they feel about that in the form of bonuses, changes in minimum wage. I think that that's a bandwagon that a lot of companies are going to get on, quite frankly, Yvonne. So we're going to see, at least in the near term, a lot more of that activity. Think about also where we are right now in the calendar year. It's the holiday season, so it's a great opportunity. I don't think it's a PR stunt. I think it's a fact of the matter is that companies look at the earnings that we had all year. They were record relative to what the expectations are. And I think they're trying to share that with the employees before they get shared with shareholders.
What does it mean when it comes to some of the international aspects of this bill? Obviously there's some provisions that have to be cleared up. This WTO complaint, as some have raised. You probably need some Democrats to kind of get on board with this. Are they likely to do so?
What's interesting about a lot of the international aspects and just the complexity of a 1,000-page piece of legislation. If I fished through my notes in front of me, I could show you the one-pager from April 27th that showed how simple it was going to be. It's obviously got complicated. The Treasury Department needs to sort out a lot of the rules, which are called regulations, and that doesn't happen for a while. So what companies have to do is figure out how they're going to operate in the interim, take a position about how they're going to operate, and then try to lobby the Treasury Department themselves through private letter rulings to try to see how they can operate in this sort of time of uncertainty.
Mitch, just really quickly, though, because this is in your wheelhouse as well, housing. Do you think this tax reform package is going to help or hurt housing?
My view, and it may be contrarian, I think it's neutral, it's not negative.
Okay.
Which is there's so much pent-up demand for housing and so little supply that it would take something really, really devastating. The mortgage deduction is still there, even though it's capped at $750. That's 3 times the median house price in the United States, so that's probably okay. And the state and local tax deduction of $10,000, that's almost 3 times the median property tax bill in the United States. So if you think about it in the United States only at sort of median dollars, it's going to be neutral. It's just the high end that's where you're seeing a lot of it. And where you're seeing a lot of the headlines too.
Yeah. All right, Mitch, great to see you. Thank you so
Betty.
much. Happy holidays.
Same to you.